In this video, I'm going to show you all you need to know about reading candlestick charts. Go ahead and hit that like button and subscribe to the channel. It'll go a long way to supporting me in my growth and the journey. Why are candlesticks important to understand? Candlesticks tell a story and are a reflection of what buyers and sellers are doing, meaning the candlestick pattern that forms at that particular moment in time tells you a lot about what is going on in terms of what the buyers and sellers are doing in the market. So traders will look at candlestick patterns and the movement of candlesticks to make trading decisions, which is also known as price action. Now let's get right into looking at the charts. Here we go. This here is the asset that you're looking at. In this case, it's Bitcoin. Here is your time frame right now, and this shows 1D, which translates to the daily time frame, meaning every candlestick that you see on this chart represents 1 day in time. If you were to switch this to the hourly time frame, it will show 1H, and then every candlestick you see on screen would represent 1 hour of time. This bar below tells you the date and time. If you take your mouse and place it on top of this candle here, you'll see it shows the date and time, which in this case is October 25th, and it shows you the price of the asset as well. Remember, a candlestick closes below at the bottom of the rectangle here, and it opens above at the top of the rectangle. If you want to understand how to read the candle and the wicks, place your mouse over a candlestick. When you use TradingView, you will see all of the information over to the right. You will see what it closed at, and in this case, 66,578. You'll also see what it opened at, which in this case, 68,155. You'll also see what the wicks show, which in this case, the low was 65,521, and the high of the wick, which was 68,726. Now, when you see more red candles than green candles in a series like this, the red indicates that it's a downward or bearish price action and that the asset is depreciating. This price action is a depreciation of the asset as sellers or bears, as they're known, will continue to sell more of the asset, causing the push downwards. When you see a series of green candles, this indicates an uptrend or a bullish price action, and the asset is appreciating. The buyers and bulls continue to buy more of the asset, causing the push upwards. This is a bullish momentum. When you see a bunch of green candles together, one after another, this shows price is gaining more upwards momentum. Now, when a string of red candles get together right after another, then this shows the opposite, a downward momentum, and the price is going to go down. In a choppy market, you'll see both red and green candles together, showing some sideways movement. This indicates that the buyers and sellers are indecisive and there's some consolidation. This is also known as a ranging market. If you like this comment, I want to hear from you. Tell me more about what you guys want to see. Hit that like button and share. It supports the channel. Trust me, it goes a long way. I appreciate it. How to spot an uptrend? Well, an uptrend will reveal itself when you see higher highs and higher lows, meaning a bullish uptrend momentum is in the market. Here I show you the bullish impulse move upwards with a string of green candles. These boxes point to a correction, also known as pullbacks in the market. Here the sellers are trying to stop the upward momentum. These boxes indicate higher highs and higher lows from a price action standpoint. A moving uptrend shows bullish momentum and that the buyers are in control. So you lean towards taking long entries to trade with the moving upwards trend. Uptrend price action. Uptrends show bullish momentum and that buyers are in control. Ideally, you take long entries to trade with the momentum. How to spot a trend reversal. Understanding how to spot a change from an uptrend to a downtrend can be achieved by looking for something like these. You have your moving uptrend through the higher highs and higher lows before a lower low forms, signaling a trend change from an uptrend to a downtrend. Next, the higher highs and higher lows that formed before you have a lower low followed by a lower high and then a pullback before a full trend change breakout. How to spot a downtrend. Finding bearish downtrends momentum in the market can be found when you see the market making lower highs and lower lows. It would be a sign to take advantage of some short trades. You have your runs here, your pullbacks, which means a downward trend making lower highs and lower lows. Downtrend price action. Downtrends show bearish momentum and that sellers have control. Ideally, you take short entries to trade with the momentum. How to spot a trend change from a downtrend to an uptrend. Here are a couple ways to identify a trend change from a downtrend to an uptrend. Look for higher highs or higher highs and higher lows. Here you have your moving downtrend to the lower highs and lower lows before a higher high forms, signaling a trend change from a downtrend to an uptrend. You have your moving downtrend through lower highs and lower lows before you have a higher high formed, following by a higher low, and right after that, a full trend change breakout when a new higher high is shown. How to spot a ranging market, or a market that's going sideways. Shows nobody really has control in the market, but buyers and sellers are not able to move the asset. Prices making the same highs and the same lows, moving in a sideways direction in the market, looks like this, and you may want to trade in both directions. Ranging market price action. A ranging market shows neither buyers and sellers are in control. This allows you to trade in both directions. How to look for momentum gain. Look for a moving trend where price is moving tightly together, and look for consecutive candles getting larger in size. A great way to identify momentum gain is to look for tight price action in an uptrend. Tight price action movement without wide swings shows buyers are in full control and are pushing the price upwards. Sellers try to push the price down, but the buyers are pushing the price upwards very aggressively. If you see this momentum, you want to trade in the same direction. In a downward momentum, tight price action movement without wide swings shows sellers are in full control and pushing the price downwards. Buyers try to push the price upwards, but the sellers are pushing the price downwards. And if you see this momentum, you'll want to trade in the same direction. Another great way to identify momentum gain is candles growing in size in an upward or downward trend. Notice how each candles are getting larger and larger. The wicks are getting small. Notice how these candles represent a bullish momentum. And what you can see here is that the candles are getting larger and larger. Not very many wicks you can see either. What this indicates that a gain in bullish momentum. If you see this momentum, you will want to trade in the same direction, not against it. Now, the same rules would apply when you are trending in bearish momentum, only that the red candles and the price will be bearish on a downward trend. But the same principles apply. I want to thank you for stopping by. Check out my channel for some more tips on trading and the fundamentals of candlesticks and momentum. Like and share. It'll go a long way for helping my channel. I appreciate this. Thank you for watching. Have a great day.